Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 26th of April. I'm Daniel Lam, your host for the podcast. For the last 4 weeks, I could not help noticing that the moves in the S&P 500 index have been very subdued, at least comparing to the daily moves in the Hang Seng Index, for example. In fact, the S&P 500 ended up flat in a number of trading days, with the index either getting sold after opening higher or getting bought after opening lower. As a result, the VIX index, which measures short-term volatility in the S&P 500 index, had fallen to the mid-teens. From a more macro standpoint, the current low levels of equity volatility on this measure does not look very intuitive, especially against the backdrop of tightening financial conditions, recessionary risk, US debt ceiling concerns, uncertainty over the Fed policies, and elevated geopolitical tensions. However, volatility in the US equities is actually increasingly driven by zero-day to expiry options trading. So short-term trading volumes have quadrupled since the start of 2020, while almost half of S&P 500 options trading is now made up of contracts that expire on the day they are traded. So the market is very dominated by option sellers, which means that the dealers are long options. Now, typically, in order to hedge out this quote-unquote long gamma exposure, dealers need to buy low and sell high. So this often leads to the intraday reversal that characterized many of the quote-unquote flat days that we talked about earlier. Now, as volatility becomes more subdued, this drives buying of stocks by funds that mechanically increases their exposure when volatility declines. For example, volatility targeting and risk parity funds. So this actually artificially suppresses the macro fundamental risk. But we do believe that fundamental factors are likely to come back into dominance as we get closer and closer to a US recession. So we continue to advocate our safe strategy and use this opportunity of relative calmness in the markets and rotate from equities into high-quality fixed income and multi-income assets. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.